Good morning, and welcome to the BYOTROL PLC full year results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where appropriate to do so. Before we begin, I would like to submit the following poll. And I would now like to hand you over to CEO Vivan Pinto. Good morning to you, sir.
Good morning, and thank you all for joining us on this investor presentation. My background is that I've had 20 years of experience in the healthcare industry, working for companies like Reckitt Benckiser, Pfizer, and J&J. I've had roles within marketing as marketing director, commercial director, and managing director. And I've worked in the UK, the Nordics, Eastern Europe, and Africa. I've been CEO of BYOTROL since November 2022, and now I've had an opportunity to review the strategy, the execution, and the projections. And the objective of the call today, for me, is to share my learnings with you. Chris, maybe you want to introduce yourself?
Yeah, thanks, Viv. So hi, everyone. And again, thanks for joining us. Most of you, I'm sure, will have seen me on these a couple of times already. So I'm the CFO of BYOTROL, and I've been with the business now since December 21, so approaching 2 years. Thanks, Viv. Back to you.
Excellent. So let's begin. So I wanted to start by giving you a brief summary and overview of where BYOTROL is. So BYOTROL has been developing new technology platforms for 20 years and started with the patenting of its first biocide 20 years ago. Historically, we've monetized that great R&D work through licensing. Now, in 2018, that changed when we acquired a company called Medimark, which had some fantastic brands in the human health and animal health arena. It was after that acquisition that effectively product sales became the majority contributor to our profit as a company. But we didn't have time to celebrate because we went straight into the pandemic. And the pandemic was really a gold rush for companies within the biocides area. When the pandemic hit, killing germs became the number one consumer desire and customer desire across the globe. And that was a large contributor to our product. But the pandemic ended effectively when companies identified that vaccines were a way of taming the pandemic, and we entered a new period. This was a period really driven by oversupply in the marketplace and combined with high rising input costs and a general economic slowdown. During this period, the European Union also implemented something called the biocide product registrations. Now, this is something which had been written into law in 2013, so it was definitely going to happen, and a lot of thought has gone into it. But fundamentally, they're going to implement that law over the next 3 years. Now, what does that law mean? That law means that biocide companies, which have historically generated safety data and chemical data based on their ingredients, will also have to submit germ kill data. And that germ kill data has to meet quite high benchmarks set by the European Union. Within this context, BYOTROL is really well placed. And the reason we're well placed is because we have a BPR approvable technology, which we call Cruise. And not only do we have that technology, but we've launched in the UK in November of last year. And the good news is that year to date, that is growing, the brand which we launched it under, at 31%. So we really believe we have a strong platform to address that. Now, the challenge which you guys are aware of, because you've looked at the recent trading update, is that expanding our business into Europe is taking longer than we expected. And because of that, we've taken down our product forecast projections in 2024. Now, what we've identified, working with Chris and with David, has been that, look, with our licensing business, we really have an opportunity to pivot our licensing business towards generating cash. And by generating cash, we will be able to fund our overall transition as a business in 2024 so that we can first complete the launch of Cruise, not only in Anagene, not only in Chemgene, but across our range. And second is to build that footprint in France and Germany, which are two important markets, as those two markets account for 50% of the entire European Union. Once that is complete in 2024, we are poised for tremendous growth as we invest in growing those platforms across the European Union. We launch our new emerging technologies. Cruise is the first. We have 3 others. And finally, we do this within a context where our competitors are going to drop out of the market as the BPR takes hold. So that's our overview. Chris, I'll hand over to you to now take us through the audited 2023 financial results.
Okay. Thanks, Viv. So moving on to the summary P&L financials, you can see that product sales are of 4.3 million are 904,000 lower than the prior year. This is primarily driven by a deliberate move away from low margin volume, thereby reducing SKU and supply chain complexity and centering us around a simplified product portfolio focused in higher margin sectors, namely animal and human health, which Vivan will talk about a bit later. IP and licensing shows a drop of 831,000, with the Rentokil agreement being concluded last July. Just note that the prior year did include and benefited significantly from the revised deal that was struck with Integrated Resources. Total gross margin is down slightly to 46.1% from 48% in the prior year, largely due to that lower contribution from IP. However, underlying gross margin from product sales has grown significantly by 6% to 43%, which we will look to build on as we move forwards, and is the direct result of this move away from low margin volume that I've already mentioned. Adjusted OPEX is 172,000 lower at 2.8 million, with FY23 benefiting from 2 R&D tax credits in that 12-month period as a result of accelerating our internal processes around submission and confirmation of these. This aside, as mentioned last year, we continue to invest in our staff resource and our R&D to create the platform for sustained future growth. Adjusted EBITDA has dropped by 751,000 to minus 712,000, which is really driven by those sales movements that I've talked about at the start. So moving on to the balance sheet. Some key points to note are when comparing versus last year, intangible assets of 3.2 million. So they've reduced by 0.3 million on last year, which is a combination of ongoing amortization, but also a rebalancing of our intangibles to reflect the focus on our 4 core technology platforms and exiting some others, namely med devices and HLD4 as examples, which will be talked about a bit more later, I'm sure. As in prior years, the long-term receivables balances comprises future guaranteed minimum cash inflows from our current IP agreements. Inventories show an increase of 0.1 million. And that's driven by both investment into and a rebalancing of our stock on hand to provide improved service levels to our customers. This being part of a significant overhaul of our supply chain function that has been undertaken in the last year. Current trade and other receivables show a 0.3 million reduction on the prior year, which is really driven by FY22 sales and the fact that in the final quarter of that year, those sales were very heavily weighted into the final month of March, whereas in FY23, sales were much more evenly balanced across that final quarter. You can see an offsetting movement in trade and other payables, which is linked to the same thing. Cash has reduced to just shy of 0.7 million. However, we did have a key debtor that paid 0.1 million just after the year end, which would have brought us back in line with the 0.8 million that we had forecast prior to the 31st of March. The borrowings figure reflects the convertible loan note that we issued in July 22, and net assets now stand at 5.6 million. Viv, over to you.
Great. Thank you, Chris. So next, what I'd like to do is to take you through our overall strategy. And you should be aware of this. We shared it last time we all gathered. So when I look at where BYOTROL focuses, we are a biocides company. In terms of the technology already on the market, we have developed 4 emerging technologies. And out of those 4 technologies, one which I'll talk to you about in great detail today is Project Cruise. But we have 3 others in our pipeline, which we're looking to launch. When I take a look at our distribution channels, we've really tried to tighten our distribution channels. I'll talk about 3 of them today. So the first one is major wholesalers, where when we look at our key categories, animal health and human health, in animal health, for example, in the UK, we have 4 key distributors, which drive the majority, 80% plus of the market. Now, with those 4 distributors, we're really moving to a key account management approach. And by key account management, the first and A1 priority is to ensure that we meet their orders on time and in full, all right? We supply them correctly. And that's an area we've really focused on. The next step is to move into more of a joint business plan approach where we work with them to predict what their order pattern is going to be so we can drive our forecasting and advise them on how to either grow their business or manage any issues they see. And then the third area, which is really important, is by partnering with them, we will also help them understand the BPR and how to navigate through that, because that's going to be quite a disruptive piece of legislation that is implemented over the next 3 years. The next area I'd like to talk about is exports, where we are a bit behind what we initially projected. However, we are making good progress. When I look in France, we have secured the registration, and we have also identified our first customer who's placed an order. Our next step there is to work with the customer to write a protocol around how they can best use our product in their operation. And that involves sending people over to do swab testing on surfaces to understand where their risks are, how to best administer the antigen product in their store. Once this is done, we will develop a case study, and that case study is really valuable in terms of convincing other people and large customers to purchase the product. So we have a plan on export, and we are progressing it. And the final area I wanted to talk about was e-commerce, where in e-commerce, we've really prioritized launching cruise through e-commerce. And the results of that is we've had a significant, nearly tenfold increase in sales since the beginning of the year. If I take a look now at the 2 key areas we invest in, they're animal health and human health. And those are the sectors where we believe we have a right to win. What drives that is, first of all, that they're high growth sectors. We expect the markets to grow around 10%. And second of all, is that within those sectors, there's specific segments which we compete in where they have high technical barriers to entry. So for example, in animal health, there are a great range of animal viruses and infection vectors which need to be controlled, whether it's avian flu, swine flu, or parvovirus, right? There's a lot of key infection vectors which we know antigen works at, and that's a source of competitive advantage in animal health. Within human health, we compete in niches like, for example, the police forces around the UK, where they require a product which not only kills germs, but also denatures DNA and blood samples. And that's something where we can meet that benefit with our new cruise formulation. When I take a look below that, we always have licensing and IP, which is a really important segment and part of our plan, because this allows us to monetize our technologies outside of our core areas. So whether it's the US, which has a different regulatory framework and high barriers to entry, where we can partner with someone like Integrated, or whether it's a new segment like a benefit we see for seaweed in human health, in pharmaceuticals, where we don't have the balance sheet to do multi-year human clinical trials. We would look at licensing and IP to drive the monetization of our new technologies there. So on the next slide, we talk about our cruise platform. And this is a really exciting platform for us, and the first of the emerging technologies I discussed. So it's a complicated slide, so let me take you through it. On the left, what you see is the infection vectors, and these are the kinds of germs which we need to kill as a biocide. So you can see there's bacteria, yeast, fungi, viruses, and Legionella. And what you see next to it is a comparison with our old HLD4 formulation and our new cruise formulation. Now, I think it's important to state that our old HLD4 formulation was very good and was the market leader in the UK. But when you compare our old HLD4 with our new cruise formulation, what you notice is that old HLD4 requires a 5% concentration, roughly, to kill all of the germs on the left. And our new cruise formulation requires just a 1% concentration, which means that our new cruise formulation is pound for pound stronger and more effective than our old HLD4 formulation. And then what you see is that our old HLD4 formulation takes around 10 minutes to kill those germs, whereas our new cruise formulation can do it in 5 minutes. So that really highlights the efficacy benefit and the broader spectrum of activity with our new cruise formulation. On top of that, what you can see on the right is that we've also modernized our packaging. We've included recyclable materials, which we believe will be a category norm going forward. And above all, and most importantly, our new cruise formulation meets all of the testing requirements put forward by the European Union to secure a BPR dossier. Now, looking at my next slide, I just wanted to highlight what do we see as the opportunity as the entire biocide industry moves through the BPR. Well, what we did was we did a deep dive in animal health, and we looked at 4 key markets, which was Ireland, Belgium, Germany, and France. And within those 4 markets, we identified 57 biocides on the market currently. Now, out of those 57 biocides, 18 of them will need to be approved by the European Union by the end of 2023. Now, out of those 18 products, by our assessment, 8 of them will secure a BPR dossier and have the capability to do so. 10 of them will not. So really what that highlights is that when we look at the evolution of the BPR across Europe, around half of the products which are currently on the market are most likely to fall away. And that creates a tremendous opportunity for us as BYOTROL, given that we have the patented BPR approvable formulation. Now what we need to do is make sure we launch it across our range and also establish our footprint in Europe. Moving to the next slide, we've talked a lot about the strategy. Now let me talk to you about how our execution is progressing. So what you see on the top left is the fact that we've simplified our business. We've reduced our SKU count from 250 to around 130. And the reason we've done that is because we went through our SKUs one by one and identified which ones were profitable, which ones had an active ingredient which was sustainable, and which ones do we think we could support through our supply chain. And we made those tough decisions to take out those which we could not support or would require significant investment to get them to a supportable level. This has had a significant benefit and improvement. First of all, if you look below it at our core business, and this is where we've got our core SKUs, the 131, we can see that that's growing at 17%. If you look at the top right, you can see the fact that it has a benefit in terms of our on-time and full delivery. And OTIF is a key measurement from our customers in terms of how many orders do we deliver to them, which they request on time and in full. And what you can see is that historically we were about 50%. And going forward, we've increased that to 74% in the first half of this year. And we expect to end at 80%, which is an industry benchmark in terms of what is considered to be good customer service in our industry. And then if you take a look at the bottom right, you can see that all of this comes together in improving our profitability, where we made a big 6-point jump in 2023. And we continue to improve our profitability, but by 1 more percent, an incremental percent in 2024. Now, when I look at the next slide, this is really about how do we grow our business. So the first point is to highlight that transition to cruise is our #1 and most important project at the moment. At the end of last year, we transferred 43% of our sales to cruise, primarily through launching Anagene. And by the end of this year, we expect to be over 70%. And that's because we've launched Anagene, and we have 3 other brands, our core brands, still in the pipeline to launch. Some of you may have looked online and identified that Chemgene, which is our second largest product, we've just launched through the cruise formulation, and we are now looking for customer feedback on how that's progressing before moving on to our next launch. When I take a look at the bottom, just to be clear, that cruise formulation, as well as showing some superiority versus our existing product, is also growing. It's growing at 31% where we've launched it to highlight the consumer acceptance of the product. Now, when we look at the top right, you can see that our access plan across Europe is moving slower than we expected. And that's because we need to launch our core products across the UK and then look at how can we expand further in Europe. So that's going to be delayed, but we would be able to conclude the key projects by the end of this financial year. And finally, on the bottom right, you can see that Amazon is really growing, and it's growing because of the cruise platforms which we've launched there. So we were doing traditionally about £1,000 a month in sales, and that has increased by August to 11,000 actually a month. So it's a significant improvement in our overall sales there. Next, I really wanted to talk about licensing, and why is licensing really important to us as a company? Well, historically, it's been the lifeblood of BYOTROL. So historically, let me just take a sip of tea. Historically, BYOTROL has grown its business and developed its formulations based on the revenue generated from IP. IP also provides us with tremendous synergies with our product business, as it allows us to monetize those technologies even when we don't have a direct operational sales route to market. And that's why royalties are really important, on top of which they're 100% margin and definitely generate a good cash and P&L impact on our business. The challenge with licensing is it's volatile, right? So we don't have the visibility of our forecasts in licensing because we've licensed the products to third parties, and it's really up to them to drive the growth and the investment behind them. The second point is that the agreement structures which we enter in are really complex and very difficult to communicate because they're multi-year, often running decades, and they have trade-offs between the cash we receive and the P&L we generate. And finally, and really importantly, is confidentiality. Very often we're dealing with large blue chip companies which frankly don't tell us what the sales figures are and how it's performing in market until after the fact. So, in terms of our ability to communicate in detail what we're doing with licensing, it's constrained by what we can and can't say. Our objective, therefore, is to focus our business on product sales. So to have product sales cover our overheads so that we have a smooth cash flow to cover our overheads. And then that leaves us an opportunity to use the revenue we've generated from licensing to either do strategic investments to drive our new technologies, or even to offer a dividend back up to shareholders. But we're still a couple of years away from making that choice. Let me move on to the next slide, which really takes a look at where we are with our current licensing deals. So I'll only really focus on two of them. And first, I wanted to explain the principle of how we do licensing. So licensing deals start with usually an upfront or milestone payment. Then they progress to minimum order guarantees. And those minimum order guarantees are booked in our P&L in the first year, but generate cash through the oncoming years. And then finally, when our licensing deal is mature, we look for royalty payments coming from successful end users, end customers who have launched the product successfully. When I take a look at our first licensing deal, Solvay, we are now in a mature state. We're in our third state. So we have launched the product across several companies. Some of them you may be able to see on TV, some of them may not. But I'm not able to tell you any detail about who those companies are and how they're progressing. What I can say is that if and when they're successful, we will get royalties from that business, and we will in fact project some royalties in for this year, which we've taken into account in our calculations. The next deal I wanted to talk about is integrated, and integrated is a different stage of our licensing arrangement. Integrated is the stage where we're still expecting milestone payments and minimum order guarantees because they have recently launched it in the US. And you may have read in our RNS that Integrated has secured EPA approval in the US, which is a great milestone. Now, Integrated's actual sales themselves are not very large. However, they have licensed it to several third parties who are in the process of getting the EPA approval. Once they have that EPA approval, it will trigger some milestone payments as well as minimum guarantees and royalty payments. So that's where we are with those two deals. With the remainder of the deals, what's critical here is that they're all at the position of minimum order guarantees. And one of the things which I know David Traynor is working really hard on is to look at those minimum guarantees and see how much of that we can convert to cash this financial year. And we're pretty confident that we will generate £1 million of cash by doing that. Now, I cannot go into the detail, obviously, for confidentiality reasons and the rest of it, but we have looked at the projection, and that's where we landed. Let me move on to the next slide. This is a slide which really highlights our emerging technologies. And the reason I wanted to raise it here is because with those emerging technologies, we have an opportunity to launch that in our product business, but also we have an opportunity to license that or sign joint development agreements to monetize it earlier than through product. And that's really where we want to focus on. With the cruise platform, we have an opportunity now that we know that the technology is really solid and its customer acceptance is very good. We can look at whether we can license that outside of Europe. The second is Artemis, which is a next generation product, which currently is in development. But once we have it developed, there's going to be plenty of opportunities to look at how we license that too, outside of Europe, but also in other sectors. Antiviral products like seaweed, where, as mentioned, if we see activity in the pharmaceutical sector, we would look to license it to a large pharmaceutical company, which can afford the balance sheet. And finally, within Virtu, where, again, with a product like this, we can take a look at whether they're retailers or other partners which are interested in acquiring the product or licensing the product for different countries and different sectors. Overall, this will give us an opportunity to not only convert to cash and drive cash in our current year, but also an exciting opportunity to drive our P&L and cash in future years. Okay. So I just wanted to put up this last slide, which I will cover later on. But what I wanted to do was first hand over to questions and just highlight the fact that in terms of our projections, you've seen the projections which have come out through FinCap, a very top line. In 2024, we have put a reduction in our projections, and that's based on the points I discussed around delays in Europe and also simplifying our range. With IP sales, whilst we've reduced our P&L projections, we have identified £1 million of cash which we can generate there, which will drive our transition as we move to our new cruise platform. In terms of our P&L, we have tight GP improvement. We have tight P&L control. We have GP improvement of 1 point, despite rising input costs. And overall, we're holding our overheads flat. And again, I think this is a tremendous achievement given what we're seeing happen in the market. This is all designed to get us through our transition in 2024. Once we're through that transition, there's going to be tremendous upside in 2025 and beyond as we accelerate our cruise platform, accelerate our growth in the UK and Europe, and launch our new technologies. And of course, do this within an environment where our competitors are falling out of the market because of the BPR. Okay, that's it. Maybe we can hand over to questions.
Vivan, Chris, thank you very much indeed for your presentation. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the top right corner of your screen. While the company take a few moments to review those questions submitted today, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via our investor dashboard. Vivan, Chris, as you can see, we have received a number of questions throughout today's presentation. And Vivan, if I may hand back to you and kindly ask you to read out the questions, give responses where appropriate to do so, and I'll pick up from you at the end.
Sure. Okay, so why don't I start with the first question I see on the list, right? Which is, do you supply any products to the cruise industry as ships are placed places where infections can easily spread, and 24-hour protection surely offers benefits. Yes, so what I will say is that that's one area we're definitely looking at. Clearly, we've been looking at it for several years, as this was a key issue during the pandemic. The challenge we have is that, particularly when we're launching a new formulation, we need to make sure that any cruise ships can restock the product, whatever port they're in, and that will be dependent on us getting the country registrations. So it's something which is definitely top of our mind, but we have to prioritize the transition before we can take advantage of it. Good question. In the 24-hour BYOTROL safety benefit, it seems some public and private organizations should logically reduce problems for others, e.g. schools and restaurants. Is there a moral issue? So what I would say there is that, look, that 24-hour BYOTROL safety benefit is the core platform which we licensed to Solvay, right? Now, that benefit is coming through, and it is something which is relevant both in consumer and both in professional. So it's absolutely something we want to focus on. The key element which we're now looking at, and we're looking for how the testing goes with our partners, is, do consumers feel that way? Do consumers see the value there? Or are they willing to purchase the product because of it? So that's something which we're really looking at keenly. Next question. What scale are the opportunities with Solvay's Actazon global companies you mentioned? Are they looking to test launch in markets? Well, look, I cannot specifically explain any of those because we're tied with confidentiality agreements. But what I will say is that there are launch tests, there are launch markets happening right now, and that based on that success, we should hopefully see rollouts in other markets. But I can't give you the details because it's tied up in confidentiality. So the next question is, why was medical device discontinued before the UKCA transition date? So I think it's a great question in terms of why we discontinued our products when we did. And the reality is that whilst we could have kept some of the products on the market longer because of the UKCA deadlines, the truth of the matter is that our license approval for the medical device was also ending much earlier in the year, in April. And the stark reality we had was to say, do we want to submit another dossier for that product for the 6 months, or do we discontinue the product now? And we did an assessment of the dossier requirements, most notably whether we had a shot at passing the clinical testing, the latest clinical testing requirements. And we felt that it was very risky, given that those products were on the market 10 years ago, and we haven't done that much dossier work on it since then. So, it's something which we thought about, and we were really careful in terms of deciding what products we're going to discontinue and what products we're going to leave on. The good news, I would say, is that we've done it. So looking forward, we don't expect to have any major product discontinuations across our business. The next question. Margins have improved. Where do you see these in the long term? I think that's a great question. So, as mentioned, we've done our big changes historically. We've done our discontinuations. Going forward, we expect to see modest margin improvement. And that's really driven by the fact that our new technologies are patented, which gives us a point of difference and a uniqueness in the market. Chris, is there anything you wanted to add on that?
I will do now. My mic's not muted. Yes. Yeah, I completely agree with that. We won't see the kind of jump that we saw between FY23 and FY22. We still see some growth, but it will be smaller increments of maybe 1% every year.
Yeah, absolutely. And that's how it should be. We're there to drive growth in our business. And we believe we have a source of difference which can charge a premium. But again, for us, it's really about now driving volume growth and building our footprint so that we're there when the competitors fall out. So what's the balance of sales between animal and human health? What balance do you see in the future? So currently, Animal health is worth around 2.5 million. Human health is worth around 1 million. Those are those two core brands, Anagene and Chemgene. Going forward in the future, we expect to see a lot of positive growth in both animal and human health. To be honest, what the percentages of that is going to be, I would say it'll maybe move more towards 50-50. But ultimately, for me, what's really important is we see great growth in both areas. I think that's probably all the questions which we
Vivan,
have at the
that's
moment.
great. That's great, Vivan, Chris. I think you have addressed all the questions you can from investors today. And of course,
Great.
the company will review all questions submitted today, and we will publish those responses on the Investor Meet Company platform. Vivan, perhaps before redirecting investors to provide you with their feedback, which I know is particularly important to the company, could I please ask you for a few closing comments?
Yeah, of course. So you can see on the key takeaways, right? What I think you should leave this meeting considering is the fact that first, the transition to cruise is really progressing well. We've got growth of 31% where we've completed the transition. We're also on track with professionalizing our business. You can see from our OTIF and our customer feedback that, we really have made a dramatic change in how we bring our products to market. We've revised our projections downwards in 24, but this is really due to the rationalization of the range, which is behind us, and also slower than expected export growth. And that's really because we're prioritizing that transition because we've seen how well it's going. In terms of how we manage that difference, our cash balance is managed by really having a tight control of costs. So we really only focus on our transition and also the cash generated from licensing. And the cruise business transformation and access to the EU will be complete in 2024. At that stage, we have a tremendous and exciting growth potential in 25 and 26 as we accelerate our cruise product, launch our emerging technologies, and do this within an environment where our competitors are falling out of the market.
Vivan, Chris, thank you once again for updating investors today. Could I please ask investors not to close this session, as you will now be automatically redirected to provide your feedback in order that the board can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of BYOTROL PLC, we would like to thank you for attending today's presentation, and good afternoon to you all.